Hello and welcome. It is the second day of August 2017. My name is Derek, and this is a silver update. We're looking at the market at 9:53 a.m. Eastern Time. As this is one heck of a wild, interesting situation in which I am observing that we'll go over. Normally, I'll take these images and I'll take a screenshot of it and then just use the screenshot to go through different segments. Then I can use my drawing tool. Basically, this whole yellow line on here, I mean, I don't need to use it in videos where I'm just going to be drawing on my Paint browser, where in here I can't. So I'm just going to have it on these types of videos. It's, I think, an annoying feature when I go like this, and I mean, I don't know if some of it you can't even read it. I'm highlighting 1666 price, but anyway, wild movements. As far as the first 60% of this time frame are up until or the end of July, just a bunch of normal moving stuff. You have a little bit of a choppy situation at the start with this low, and then this high, which doesn't immaculate into much. So a lot of choppy action on the 25th and 26th, or up until the 26th, when it has this rally and then another higher high. But we can see it's been declining since the month has come to a conclusion. And now enter August. Wild movements. Right in here, first of all, this is not as wild as what we're seeing after this, but you have a quick little sell-off up down to the 1657. Oftentimes from failed moves comes fast moves, but no, because it regained its area. It was unable to get outside of this band, and it went lower. But look at this little level in here. I mean, what happened here? When you're looking at charts, you have no choice, in my opinion, but to shorten out the time frame so you can say, what the heck happened in here? Now, I've already seen it, so I know, but I'm going to shorten it out because I can do such. But even in here, look at what's just occurred. We've had this support level, and it's 655 to 660, so basically the second half of the 1650s was that of big support. And even at 1650, even from the 28th, was big support as well. It broke through every single one of these in the last hour, and it has managed to get it back. So we're looking at the possibility of failed move, fast move, which is when you break through a key area and you relatively quickly, and this was faster than relatively quickly, get back to where you came from in your trading area, which is exactly what has happened. Therefore, on the break of this number, you're seeing 73 to 75 cents on the 16. Oh boy, at the least you would think a test of what happened back here. We're going to have to shorten it out and very soon. Well, I guess now is soon, so let's shorten out the time frame to the 15-minute chart. And okay, so this happened roughly at around 11 p.m. UTC. And I got an advertisement here, real-time quotes from the Toronto Stock Exchange. Not interested. And there we go, that's fixed. Okay, now we have a quick rally well above this high, and a quick sell down below this. That's just telling you this thing is going to go wild. That's what the message of that market is. And your bias normally is to the downside first anyway. Now, if I was to trade this based on the analysis, and we are back in here, I would have said, okay, long or short. I would have been short. And I would have won, because at least I hope my sell order is, or my exit position would have been down in here, because it would have been significantly below this low, which is what happened within such. And this is what's interesting about this gambling game. And don't get me wrong, when you're buying and selling these well, they call it paper contracts. I mean, paper is so 100 years ago. But digital contracts, we got computers and whatnot. However, if you had a sell order here at, say, 1646, or cover your short, basically, congratulations, you win. But if, say, for example, you had it at, say, 1640, and then you wake up and you see this, you're like, holy shit, you know that the gambling game didn't work out for you on that occasion. Now, as far as the physical situation, the physical tangible game, you're darn right, it's a gambling game. I'm in it because I think it's a very good calculated play to hold physical 999 silver. Nothing wrong with 90%, 80%. I got some of that as well. And in, of course, your own possession. And I say gambling because what happens if the manipulation doesn't end or the manipulators win in the end? What happens if aliens come on the planet and they decide to generously donate 75 trillion tons of physical silver? I mean, there's so many probable and improbable things that can happen. And I don't think either of the first two that I said are probable. Or the only two, rather, that I said. So as we move on within this chart analysis, so there's the breakdown below on this level. Failed move, it's looking like. But it's got to get above this key resistance field. We can see several hits in at 16.685-ish. And then again at about 1670.5 as even up to 71.5 as its resistance from this point here. So therefore, you see the market trading in here in the 70s, close to 80 even. This thing is now probably ready and poised to, one, have a test of this 1692-ish or so area, but potentially even doing much more than that as well. But definitely in stage for a wild day. All right then, so let's take a look at some other time frames while we are here, and let's take a look at this on the 4-hour chart. Back here, paper trading. I mean, I even myself, I write notes sometimes about what I'm doing. But that's just notes. I actually don't trade with paper. All right, so this move here, this was one of those 100% likely or 99.9, and repeat those numbers about 50 times, percent chance that this was part of the powers that be, monetary system controllers within the most seemingly like the banking institutions that decided to put this move on around a month back now in the early parts of July. And obviously if that move failed, if you're talking about how profitable it was to sell there, yeah, no, it wasn't. And then you look at the situation since then. You had a little small decline afterwards, but 1 low higher, 2 higher, 3 higher, 4, even that, I guess, even though not really. And now this one in here. So that move that was established earlier a few hours ago or minutes ago, yeah, a couple hours ago, has what looks to be, could be this higher low. So that's something we know that the trend, even though it's going sideways, starting to decline, that's what was doing that in here a little bit as well. And as I was stating, a move up to this point, well, that's at least a test there. And it's very common if it does resist there, that you're going to support in this area that was an area of resistance, or still is for that matter, in the 1675 to the 1685 area. But if you break through that, well, where is she poised to go again? Let's look at the time frames I'm used to showing, which are the more, well, intermediate, longer term time frames. And we see this outside day on this daily time frame, a situation in which it comes below the 18 average of highs, pretty much to around the 18 average of closes in that area there. It obviously broke through the short-term resistance, making highs not seen since the middle of June. So this is poised to tell you we're ready to do something here. And what's the something going to be? Well, on the downside, that something would be a further decent retracement, and the next level of support to me looks like 16. And then on the opposite end of the spectrum, breaking through this resistance, as I stated, breaking through 1699. Well, I suppose I can get some Fibonacci calculations in order. So we'll do that now. I got to get a keyboard to actually type this in, but I can actually pause the tape and put the numbers in. Okay, so the 1439 low and the 1865 high represented up here brings the key numbers in at hairs below the 16 and 17 handle. So therefore in here, that's the area which it congested from and lifted to, and then it's doing what it's supposed to do. 1689. What's the high in here? 1694. So it has barely pierced above it. The 76.4% number would represent that of the next key level if it's going to break above here. So it's really a short-term target. 1754, it coincides, of course, with this previous high. So one of the things I'm looking for in a break is a move to 1754, then maybe a price correction back down to 1680. But that's, of course, parlaying what you think is going to happen on the event of a break of, we'll say, 17 within it. And as far as the Fibonacci from this level in here, if it tops, well, I can tell you right now that if you top at, say, the 61.8%, that 38.2% down is going to work out to pretty much 1589. And let's just show what 1439 and 1689 does. And there's that 1589. And then, so that would be the area on any type of falling through, because of this is what this pattern tells me. It's going to have a decent, it's basically going to go to its next key level, and it's probably going to be relatively quick. So as we were shortening this out from before on the 1 hour time frame, it's the best parts to signify it's got a good chance of going higher is until it has a significant break around the 73 handle. If you start to see action down below 16 and here, the 1650s, then you're definitely going to be concerned, of course, it's going to make it on that lower end. And this is silver. This is a game that some people have stated it's a little bit or a lot more manipulated. So to think that you're at risk for any type of failed move, whichever direction it happens to go, if that's how you're leaning towards, oh, the risk is totally in place. But expect wild movements to continue within this. I haven't shown you a weekly or hour or monthly chart. And a weekly chart, we're seeing a lot of this choppiness that's coming into play. If you get a move above 17, then you're essentially trying to make a move up towards this next level of choppy resistance, which is in at 1770 to 1850. This, again, everything is choppy from 14 at least up to 19. Very, very choppy. But on the monthly time frame, we got this sideways consolidation that's been going on ever since the last 3 years or so. We finished the last month with what would be that cattail formation from that one move, of course, that brought the price below 14.5. Move, of course, below this band. So it's had, after a long decline, a statement, okay, let's try to revert the trend, come back to support. Oh man, we're struggling, just even come back to even test it again. which is ultimately what this thing needs to do, is break past this. But as I've been stating for the last year or so now, that if this doesn't transform and this thing ultimately breaks down, that's going to be a failed move and fast move. You would think not only at least to this low, but realistically, no, you'd be looking at a failed move probably into about 12. Now, I don't think that's going to happen. It might. And I think if it does happen, it's going to be something like we've seen in here or even back in here, where it would rebound relatively quickly to at least into this previous trading range. If, of course, that happens. I thought this would be about the time that I would expect the market to really have some substantial gains, because it was several weeks back, probably closer to a dozen, 10, 12, where I stated I'm expecting this price action to significantly start to have a good uptrend. I wasn't going to call a bottom, which is exactly because of something like this, but stating that an uptrend is probably coming into form. And I was thinking really late summer, early fall. So August the 2nd indicates you're at the halfway point of summer. And that's, of course, where it stands. So another long video, but wild, wild, wild movements to say the least. And thank you for tuning in.